The common phrase surrounding the financial crisis of 2008 was, what will be the next shoe to drop? Well, as Wall Street eyes risk outside the banking system after the collapse of SVB, one strategist is drawing attention to all implicit or explicit carry trades. You can read all about this in today's morning brief written by our very own Julie Hyman over at the Yahoo Finance homepage. And let's take a deeper dive into what exactly a carry trade is. So, Julie, we've had super low rates around the world, roughly speaking, until recently for about 15 years. And if you borrow low at some of the countries that have the lowest interest rates, like Japan, well, you can use that money and buy assets in countries where assets are higher yielding, especially the commodity countries where things just carry a bigger premium. So just break down the piece as you were writing it.
So the carry trade, as you're referring to, typically refers to FX and rate markets, right? It's not something typically that most people think about. It's sort of a more sophisticated institutional way of trading. Marko Kolanovic, who is a very closely followed strategist at JP Morgan, exactly, he wrote about the carry trade and he talked about implicit and explicit carry trades, and he really broadened the definition, kind of in my view, of what he considers to be a carry trade. And I wrote about this in part in the morning brief. He talks about a lot of other things where people were borrowing low and then trying to get a higher return. Things like commercial real estate, things like auto loans, things like credit cards. He talks about private equity, which is also something that Tony Dwyer of Canaccord Genuity pinpointed. Venture capital, for example. So basically, in an era of easy money, there was a lot of borrowing in one place to try to get that better return in another. Now, SVB is just one example of where that kind of a trade is perhaps unraveling. And the question that I posed in the brief is, what's the next shoe to drop? A question that, in covering the great financial crisis, was asked on a nearly daily basis. Now, this is not the great financial crisis.
Very important.
But as Tony Dwyer pointed out in a note to investors, the next risk is the one that you're not looking for, right? It's the one that is perhaps hidden to the naked eye. And so it's almost inevitable that there will be other areas of vulnerabilities that are revealed.
Yes, and also because we're talking about the carry trade, and it's really a function of the Japanese bond market and all the bond buying that they've done for decades. If that blows up, that would also change the circumstances of the carry trade. So I would posit that that is on the table too, because Japan's debt has gotten to perhaps unmanageable levels in a rising interest rate environment. We don't know if that's happened yet. But if we go to the Wi-Fi Interactive, I want to show a chart of the euro versus the Japanese yen. Now, this is kind of one of those exotic foreign exchange crosses that is really seen as a barometer of risk. So when it's going higher, and by the way, this goes back 10 years. So when the chart is going higher, prices are trending higher, that means the euro is in favor. That's more risk on versus the yen. And so that is reflecting a carry trade, that people are borrowing or selling the yen, taking those funds and buying things, perhaps in euros, but also other places around the world. Now, when that reverses, and it oftentimes reverses suddenly at the end of cycles, as we're getting this credit crunch, as the Federal Reserve is just beginning to show that it's affecting the markets, that usually ends up with a rush into the yen at the very end. That is the end stage, and that's what I'm looking for as a barometer. Let me show you one more thing here, what's happened over the last 5 days. Now, we saw this sharp move lower on Monday. That was yesterday. That was coincident with the failure that we saw with SVB, that whole resolution. So this lower means money is flowing back into the yen. If this continues in a big way, that's a big marker for me that we're in that final credit crunch. But not there yet.
No,
we
not
still
there
have
yet.
more to go, Julie.